Thank you for your patience. And we're welcoming our LinkedIn audience as well. Welcome everybody to our expert webinar. Fintech Revolution, the journey so far, the trends for 2022, and career you. Our guest today is Yogendra Singh, who is a partner of Protium India. It's a leading fintech firm. And just a quick note, you can enter questions for Yogendra at any time into the Q&A panel of WebEx. If you're watching on the live stream, you can enter those into your comments or chat, and we'll take those toward the end of the hour in the Q&A portion. We also have a couple of questions, one before and one after Yogendra's presentation. So let's start with this. And get a feel for the audience. How many years of experience do you have in the workplace? We're not asking about fintech experience, we're just asking about general experience. The second part of this poll is, how are you doing today? We've been asking this since the beginning of the pandemic to see how people are responding to lockdowns coming and going and surges rising and falling. So it's just a check-in with you. And we have about 10 more seconds on the poll. And here we are. Here's the result. Yogendra, as you can see, we have an audience that is primarily people with 5 or more years of experience. You have some folks who are still in school and people in the less than 5 years experience category. It's good to see that everybody is doing either well or in the middle, with just a few exceptions, and we hope that this webinar will help to improve your outlook on your future. So with that in mind, I'm going to introduce Yogendra Singh. Excuse the typo, it should say partner, Protium India. A preeminent engineering-led risk-focused lender in India. He has individually 21 years of experience with various major organizations, and at Protium, he leads development of the underwriting and decision-making models, and he spearheads the consumer lending business, both secured and unsecured. So we're very fortunate to have him here. Welcome. And I'm going to stop sharing my screen and allow Yogendra to share his. And there you have it. You're on mute. You're good. There we go.
Hello, everybody. Thanks for joining. Thanks a lot, Stuart. And thanks a lot to everybody who has joined at 9 o'clock. I understand this will be dinner time for most of you. I hope that this talk is probably as engaging or as rewarding as the food that you're enjoying. And with that, I'll deep dive in. Stuart, I believe you guys can see my screen?
Yes, we can see your presentation.
Perfect. So without much ado, I'll just start off with the basic premise. We start talking about fintech revolution. Now, is that a revolution or is that an exaggeration? And that's something which has occupied the minds of people, considering the events which have surrounded the industry, especially in a in the last 2 years, which have been dominated by COVID, fintech also has become a really big buzzword in India. Now, Angela Strange, who is a partner at Andreessen Horowitz, which is a very well-known venture fund, she made a statement around a few years back saying that every company will be a fintech company. In a way, that statement is meant to illustrate the importance of fintech industry and the universality of the industry per se. And over the course of this presentation, we'll just try to dissect the truth in this statement and what are the different drivers of the industry and what will be the outlook going ahead. So if you look at, let's say, the year in numbers, fintech industry has done amazingly well. It has reached an aggregate valuation of close to USD $3.5 billion, $3.5 trillion. To put that into perspective, the Indian GDP is somewhere around 5 trillion or so. So it's actually quite comparable to the Indian GDP. And the fintech universe as a whole, if you have to rank it within countries, it will probably be in the top 10 in the world today. Roughly around USD $125 billion was invested in this industry in the year 2021, a record year by a margin. This was led by funding across, let's say, large mega rounds, which are basically classified as funding of USD 100 million or above, or early stage funding. 2021 was a record, whether it is in terms of the amount of money which was invested, or the valuations that people reached, or the number of unicorns that it spawned. There were just about 193 unicorns which were born in the year 2021, which means that roughly every second day there was a new unicorn getting built. India, coincidentally, was the third largest VC funding destination in 2021. We got a funding of close to, let's say, 9.3 billion, close to 233 funding rounds. All in all, a great year. And that to a large extent, explains why this particular industry has captured the imagination of people. And I believe most of the people who are looking for newer careers or looking for a change in careers, it has become probably the most favored industry segment. Now let's look at what are the different drivers and why is it that fintech has done so well in the world and especially in India. We'll try to look at both the demand drivers as well as the supply drivers. On the demand side, we have, let's say, three major drivers. You would have young population, rising incomes, and digital enablement. On the supply side, we'll have three core drivers like India digital stack and the government push, saturation, as well as capital availability. Now, from a demand side, this is something that probably most Indians are aware of, but it is still worth repeating. We have a young population, quite young as compared to any of the other established countries. And coincidentally, we also have the second largest population at, let's say, 1.4 billion. We are just second only to China. So this combination of young and large population creates a significantly large market. If you couple it with the fact that India is still probably one of the more open countries, it becomes a magnet for investment destination. If you look at the average age, Indian average age is just about 27 compared to 38 in both China as well as, let's say, the USA. That kind of illustrates the youth of this population and the fact that this population, by its very nature, is much more attuned to digital means. Almost everything in their life is now actually being done digitally. From an income perspective, as you can clearly see, India has been growing pretty fast. A 10.4% growth rate in income may seem less for people who probably don't have the comparative statistics. But if you think about it, most developed countries typically tend to see an income increase of just about, let's say, 1.5 to 2%. As against that, India growing at around 10% or so is a significant achievement. And a 10% of growth rate typically results in a doubling of income in less than 5 years. So what we are witnessing is a significant change in the entire composition and the income classification of this country every 5 years or so. That kind of dramatic change by its very nature is conducive for industries which are actually geared up to capitalize on it. There are industries which are traditional in nature, which are very slow moving. They will find it difficult to survive in this climate. But fintech, being a tech-enabled digital delivery mechanism, is perfectly placed to capture this kind of a growth dynamic. Now, from a digital enablement perspective, and this is where the story gets really interesting. If you look at it, even today, India has somewhere around, let's say, 650 to 700 million people who have access to internet. This number is expected to increase to close to 1 billion people by the year 2025. Smartphone users, we have just about, let's say, 500 odd million people, expected to increase to 800 million people by 2025. And online transacting users, basically the holy grail of everything related to either e-commerce or let's say fintech, that number is expected to increase from somewhere around, let's say, 250, 300 million people to something like 750 million people in the next 5 years or so. What we're talking about is in 5 years, we'll be creating a digitally enabled population which will have a size equivalent to or higher than the US has currently. That's a mind-boggling number. And that, to a large extent, sums up the growth dynamic which is driving this industry. Now, from a digital enablement perspective, the other thing to note is the fact that the Indian population, even today, exhibits a very strong propensity to actually be interested in, let's say, fintech adoption or be interested in e-commerce. Close to 87% of all people who are digitally active actually have had access to or have experienced fintech products. That's a significantly high number, quite comparable to China, but significantly higher than the 64% average that we've seen across the most of the developed countries. So all in all, from a, let's say, demand perspective, whether it is young population, coupled with, let's say, digital enablement, as long as, and rising incomes, albeit from a lower base. All three of these factors put together an economy which is significantly geared up for a step change in fintech adoption. In next 5 years, you would see that the world would change dramatically. I mean, try to imagine even India 5 years back. The stuff that we have seen today and the scenario that we had 5 years back, that itself has changed so much. And over the next 5 years, it's bound to change even more. Now, let's look at how the supply side drivers have worked out. In this, India is clearly an outlier. Like, we have an India digital stack, which has been built largely by the government of India. Now, fintech across the world has largely been a private enterprise. Most of the countries which have experienced this kind of growth, they've all piggybacked on the rise of a few large companies, which have led to somewhat, let's say, either a monopolistic or an oligopolistic situation. While in India, the government has been far more, let's say, forward thinking. And they've actually created tools which have allowed even the smallest of the firm to have a chance of competing in this market. Now, what are the different India digital stack that the government has already built out? We have a digital identity, whether in terms of Aadhaar or PAN, that allows each and every citizen in our country to actually have a means of, let's say, proving their own identity. Then along with that, we have also created secure authentication architecture. There are multiple ways in which you can do your know your customer or KYC regulations. So you have methods like, let's say, DigiLocker or CKYC or OKYC or eKYC. Now, for people who probably don't come from this industry, this is especially important simply because most of the products that we are doing, you would want to know with whom are we associating with whom are we doing business. If you have no means of, let's say, corroborating the identity as well as the address of a customer, then we'll have a challenge. But by coming up with secure authentication architecture, which is freely accessible to each and every firm, whether large or small, the Indian government has created a significantly competitive level playing field. Along with that, we have different payment systems which have created a cashless transactions stack. You have different modes of payments like UPI, IMPS, NEFT, RTGS, or e-sign, which allow people to actually transact as well as contract without any physical interventions. Today, we can actually transfer money from one person to another, from a person to a merchant, from a merchant to a person, any means electronically and at any denomination. So the matter is, you can transfer amounts as low as 1 rupee to as high as, let's say, even 10 crores using just about any of these digital means available. Then we have the consent-based data transfer. Now, whenever we are, let's say, doing business with somebody, one of the key requirements is our understanding of the customer. Our understanding of the customer is a function of the data that we have about the customer. Typically, you have over here also, we have digital transactions enabled platforms which provide you with, let's say, bureau data, bank data, or GST, and multiple other information that we can get by actually taking the consent of the particular person. Consent part is quite important. And if you look at it, the Indian government has, as well as the regulatory agencies, have been very, very activist in enforcing this consent-based architecture to ensure that the industry grows from on a sustainable level, and each and every customer has a right to actually safeguard their data and share only when they feel it is necessary. If you put all of this together, today in India, you can actually give out a loan in less than a minute. We as a company are actually already doing it. We are enabling purchase of smartphones, which happens in less than a minute. And all by just giving, let's say, a few identification information, and everything gets done electronically. Along with this, so these are more the established digital stacks that we have developed. Along with this, the government is working on a whole lot of other initiatives which are going to revolutionize the way in which our industry is functioning. A few of them would be account aggregators, which will actually take this consent-based data transfer architecture to a newer level. People will be able to control for how long do they give information, to whom they give information, and they'll be able to transmit all information that they would want to any of the people. We are also working on a national health stack, which will combine all the health information about a person. We're also working on ONDC, which is our open network for digital commerce, which will actually be probably a first in a kind open stack environment for enabling e-commerce. So we are not resting on our laurels. Fact of the matter is, the public stack availability in India is increasing exponentially, and that actually gives most of the smaller players a very, very significant competitive advantage and a chance to compete with the larger players and to provide services in a digital manner in a very convenient way. And to fintech or consumer businesses, they operate on what we would call, let's say, instant transactions, or the transaction time would be, let's say, a day or two. Typically, fintech lending businesses, they operate on deferred term payments. That those payments could, the time duration in those payments could be as low as, let's say, a month or 15 days to as high as 10 years, 15 years, 20 years. A digital home loan could typically run for even, let's say, 30 years or so. So the time becomes quite different. Credit losses. In your classical businesses, credit losses are simply not there. If you're only delivering the services, once you have been paid, chances are quite low. The I would say closest analog to credit loss would probably be to some extent in the e-commerce field, where you have cash on delivery and you have returns of products, and typically you do lose some amount of money because the products have been returned, but it's still not a significant amount of money that is at stake there. While in fintech, you can have actually quite high losses. And a lot of companies have also gone up belly up because they've not really understood that this is a model which is quite different. Your ability to understand customers and make sure that you give money only to customers who are likely to pay you back is what will differentiate a good fintech from a bad one. I mean, as the famous saying goes, typically, the joke between NBFC and fintech is NBFC is basically a fintech which is profitable, and a fintech is basically an NBFC which is loss making. So, from a regulations perspective, you have consumer internet businesses typically run with generic or let's say low entry barrier regulations, while lending is a highly regulated industry. So your ability to comply with regulations whilst providing convenience and security to customers becomes a key factor in success. Then the simple financial model. By its very nature, consumer internet businesses, they will typically tend to have high unit economics, high profitability, and low leverage. While the lending business, by its very nature, is a low unit economics model. It operates by its very nature with extremely high leverage. So, all put together, you can clearly see that the lending business is a very, very different business to run. It's not an easy business, and that's why we see significant level of failures in this industry. But by that very nature, that makes the industry far more attractive, because if we can get it right, the scalability inherent in this business is extremely high. Now let's look at, okay, what are the different segments that typically we see in fintech lending? We have unsecured consumer lending. This is something which has been quite popular in this country, and the products are largely around, let's say, cards or BNPL, which provide mostly short-term financing or term loans. Now, these term loans could typically be duration ranging from as low as, let's say, 3 months to as high as 5 years. Then you have unsecured business lending. Unsecured business lending, once again, the form factors could be simply cards. You could have business spending cards, or you could have invoice financing, where, let's say, you are buying from some place or you are selling to somebody. That invoice could be financed, could be, let's say, discounted by a lender, and money could be advanced to you against that particular invoice. Then you have revenue-based financing, which is simply a means of, let's say, providing debt capital to small businesses on the basis of the revenues that they are making. To a large extent, this is an area which is trying to make it much more easier for companies to get access to capital on the basis of the growth that they are witnessing in their operations. And fourth is your classical product, which is a term loan. This is simply any unsecured lending with term ranging from anywhere between, let's say, 3 months to 5 years. And then you have quite a few fintechs which are operating in the asset-based lending market. Gold loans has become a significant product. As you are well aware, India is a country which has significant love with gold. Almost all the households carry significant gold holdings. We have the largest holding of gold in the entire world. And companies have come up with ideas of how to make sure that this gold can be used for liquidity purposes. Hypothecate the gold to get some money against it, and it becomes a relatively safe transaction for everybody, considering the fact that it is relatively quite easy to actually sell the gold and get your money back. Then we have vehicle financing, typically two-wheelers or four-wheelers, which are now getting done electronically. And then you have these real estate-based loans, where either you have a home loan or a loan against property or a home equity line of credit. So if you look at it, the gamut of services available on the lending is significantly large. It's an amazingly large market operating in. And there are significant narrow areas or niche areas that fintechs can focus on and try to derive growth or success out of it. So that, to a large extent, sums up the presentation. But before we end, I would just like to take a couple of minutes just to give you an idea of the company that I'm working with. So Protium started just about, let's say, 2 years back. We are a fairly young company. We operate across, in fact, most of these business lines. We actually do unsecured consumer lending. We do unsecured business lending also. And we are into asset-based lending as well. We are a company which employs close to 1,300 people. We are present in somewhere around, let's say, 50 odd locations. And we have significantly large, let's say, seed round. Say that we probably raised the single biggest seed round of close to $200 million in this country. We are on the lookout for young, enterprising, and smart people across analytics, technology, business, everywhere. So feel free to reach out to me or to any of the team members on LinkedIn. You can find us all there. And please feel free to reach out if you feel that you would like to work with us.
Wonderful. Thank you for that, Yogendra. It's really an eye-opening overview of FinTech and its impact on India's development, but also the changing of the world in this post-pandemic digital transformation mode. It's something, I'm based in California, although I work for Simplilearn, which is based in Bengaluru. But here in the United States, we have only just recently started seeing things like neobanks being heavily advertised. One of the things that I noticed in your presentation about micro contextual insurance is that it's not a new idea in that many years ago, if you were at an airport in the United States or in many other parts of the world, there would be a kiosk that would let you fill in a flight insurance form, put some money in the envelope, drop it in the kiosk, and if anything happened on the flight, insurance would pay off. Also, when you rent a vehicle in the United States, you have options to do collision damage waiver of the vehicle or loss damage waivers for your contents of the vehicle and that type of thing. So that old concept is now being extended to all types of microtransactions, isn't it?
Yeah, I agree, Stuart. To a large extent, I mean, if you look at the way the fintech industry has developed, it's not that the business models are unique. They're just trying to do the same things using digital means, changing some of the things along the way, and making probably possible some of the things which are not possible simply because of physical world.
Yeah.
So in India, it's more about, let's say, if you take loans. Now, if for a physical bank giving a loan of, let's say, 5,000 rupees, or maybe let's say just about, let's say, $50 or $100 is very tough. But if you have pure digital means, it becomes possible. But the basic business of giving loans still remains the same.
Yeah. It's also interesting that, as I just mentioned, with the idea of the point of transaction microinsurance, you now have the ability for point of transaction lending. So you can have instant credit decisions being made. Somebody who's at a retail outlet or other place where they're making a transaction. So that's a quite a different phenomenon, because as you say, there's no way a physical or traditional bank would be able to handle a credit application within the matter of a few seconds. Yes.
True.
We have a couple of questions that have come in about blockchain technology and its role in fintech, and whether fintech and cryptocurrency have a relationship. So could you comment on that?
Sure. I think this is from Sharafatul.
Mhm.
Does blockchain required in fintech like Bitcoin and cryptocurrency transactions? So to a large extent, look, blockchain is basically the building block on which, so it's more like a decentralized ledger. What we are trying to do over there is to create a system by which you are creating ownership without anybody being aware of it. Now, if you look at any of the cryptos, yes, underlying, they will always use a blockchain, whether it is a Bitcoin or Ethereum or or Solana, any of those things, they are definitely using blockchain.
Um, Kartik, who came in from our LinkedIn audience, asks, how do you see the future of B2B lending in India, especially invoice financing, what used to be called factoring in the United States?
Immense promise. If you think about it, factoring in India has been there for a long time, but it's only now that it has started acquiring prominence. And from a regulations perspective, now that RBI has actually allowed every NBFC to do factoring, the market has become much more clearer. Earlier, you used to one needed separate, let's say, license to operate as a factor. Now, the licensing regime has been actually made easier. The second is the rise of B2B platforms. If you look at it, there are companies like, let's say, Udan, or there are companies like, let's say, Flipkart or Amazon. All of them are operating a significant level of B2B commerce. All of them have significant B2B, and we actually are significantly active in that field. Uh, Almost all the sellers on any of the B2B platforms, they actually require invoice financing. The amount of volumes that we ourselves are seeing is immense. And we have merely touched the best, let's say 10 or 15% of the population. So from a
Go ahead.
pure, yeah. So from a pure, let's say, but if you look at the way most of the entire, let's say, supply chain across, let's say, industries like, let's say, whether it is FMCG or consumer durables, that is yet to be mapped. So from, according to me, we have barely covered just about 1 to 2% of the market. The remaining 98% is yet to be tapped.
We have a question from Devansh, who asked if the growth of FinTech directly depends on the population itself growing or the increase of internet users within the population.
Actually, both, because to some extent, both of them are actually interrelated. Now, if you have a country, I mean, take countries in Europe. Over there, population growth rates are fairly low. Internet adoption has increased, but it has now reached a plateau. So, if the actual population doesn't grow and you have already reached more or less high penetration levels, then the industry can't grow. In a country like India, both the factors are quite high. You have growth which is coming from internet adoption of the same population, but the population itself keeps increasing. So what you would have what we would call a multiplier effect.
So Vishal asks, what's the revenue model for companies like UPI or payment gateways? How are they earning revenue in facilitating payments?
Okay, so now that's a pretty interesting question actually. If you think about it, the 3 or 4 large players in the UPI payment companies are PhonePe, Paytm, Google, to some extent Amazon and WhatsApp. Now, all of them, because the government, because there's no merchant discount rate on UPI, you actually can't charge for transactions. So, what are the different ways in which you can still make money? One is if you have, let's say, 200 million people or 300 million people who are transacting with you, then you get to see what are the kind of, let's say, transactions that they're making. Depending on those transactions, you can start selling value added services. Those could be, uh, let's say, an insurance or lending, or let's say wealth tech products, or even insurance products. If you have those people listed onto you, there is no, I mean, there's no dearth of opportunities with which you can interact with the customer. All of these, there's a reason why all of these companies have spent so much of money in trying to acquire the customers. Once they have the customers who are actually staying with them and who are sticky, then that becomes the default platform through which you actually do the cross sell. So that, to a large extent, is the promise of the model, and that's how the money would be made. And of course, they're also hoping that over a period of time, the MDRs will probably come back. You might be able to charge for transactions, or you might be able to create, let's say, value-added services around it.
Yeah. We have a question. I think it's probably on a lot of people's minds. Arnaldo asks, what is the most high-paying job profile in the fintech industry?
Actually, if you think about it, one is if you are really good, you get paid quite well in across all the disciplines. Like in our company, if I look at it, whether it is tech or analytics or business development or strategy, the top performers get paid almost equally. You just have to be pretty good at it. But considering the constraints on tech currently in India, I would say the tech guys actually get paid quite well.
So,
And analytics guys, probably even more. Simply because analytics is a fairly uh, emerging field. We didn't used to have analytics 10 years back. It is largely a last decade invention.
yeah, I think that the history of analytics is interesting because it's existed for a long time, but it hasn't become, democratized until recently, where the availability of tools for visualization, for data analysis, for modeling and making inferences, all of that has evolved so rapidly in the last decade that um, now it's not a matter of going to some specialist firm and asking them to do analytics for you. It's a tool that people can operate essentially from a desktop and still get things that would have taken weeks for a consultant to produce in decades past. So, uh, what are the kinds of tech skills that are most important to a company like Protium?
Well, to a large extent, we actually require, let's say, full stack coders, and we are specifically interested in people who actually have expertise in either of Python or Java. The Python usage has increased considerably. We actually use it extensively across both the tech as well as the analytics domains.
Okay. We had a question about neobanks, and Nihal asked, can a neobank operate as a multiple bank aggregator?
As of now, no, because most of the bank, I mean, you can have one-to-one relationship with the bank. From a, let's say, if you want to operate as multiple bank aggregators, a few people are trying it. But one of the ways in which you could do that is if, let's say, you went with an account aggregator license, and an account aggregator would typically be able to do it. But yes, this is a problem that a lot of people are trying to solve because this has significant business potential.
Yeah, I've noticed that in recent years, tools have come out like a company in the U.S., Mint, which is part of um, it's part of one of the major early fintech companies that was dealing with mortgages and other types of Intuit. I'm sorry, Intuit was the online accounting service, and then it's branched out. And one of its divisions, Mint, gives you your overview of all your accounts, but it doesn't act as an aggregator in the sense that you can't transact between accounts through Mint. You can just see what your different balances and payments are. So, Udaya in the LinkedIn audience asks, what is the scope of a career in financial advisory? And you touched on the notion of wealth management in fintech. Um, so how does that impact careers in financial advisory?
The career in financial advisory. Now, if you look at from a pure, the way the classical industry worked, financial advisory was largely a means by which you would have more like interpersonal connections and you would try to advise, a few clients at a time. Now, financial advisory in the fintech domain is more about trying to come up with mass market solutions. So what one would call, let's say, robo advisors, or coming up with, let's say, models which try to give a solution to a lot of people or from a mass customization perspective. So over here, probably using analytics to do financial advisory is something which will probably grow far more faster than your traditional method of taking one client at a time and trying to give them the best advice possible.
Rohit has a question I think I can answer, which is, are there courses being offered in India related to blockchain for chartered accountants? One thing I can mention is that Simplilearn itself offers courses in partnership with different universities, and one of them is IIT Kanpur, which is the home of the Indian National Blockchain Project. So that's a suitable course, I think, as an overview of blockchain technology. Yogendra, can you recommend any others?
No, I think that definitely is probably one of the best courses to go around with.
Yeah, thank you. And we have a question about what's the future of fintech in Africa?
Once again, I mean, Africa actually, from a micro lending space or on a micro saving space, they have been at the forefront of it. I mean, uh, Kenya, Nigeria, both of these, as well as, let's say, South Africa, we have seen significantly large companies emerging out of that. And that's one of the good success stories.
Excellent. I know that there's a firm called Kiva that facilitates microlending from people in the U.S. and Europe to help African and other um, microlending consumers to start businesses, that type of thing. It's a very interesting way of channeling resources in a highly productive way rather than giving charity. So we have a question from Pooja that asks about sachetization. And is that something that's helpful in reducing cost, or is it being driven by something else?
It is largely driven by actually increasing the addressable market. So imagine if you had to, let's say, reach out to somebody. So if you're, let's say, a savings company. Now, typically, uh, investments in equity securities or investment in mutual funds, they would have, let's say, higher ticket sizes. But what if you wanted to allow somebody who probably let's say, gets just about 10 rupee a day? Right now, it will be difficult for him to actually invest because he'll have to wait for till he gets to 1,000 rupees or something so that he can invest in it. But micro saving companies will actually allow them to accumulate this and try to do this. So this way you are giving access to somebody who probably didn't have access to it before. So it's more about this expanding the total addressable market.
It's it's kind of the opposite of the tendency in consumer products in some places to go to warehouse stores where people are buying in bulk quantities and
True.
large containers to get a discount. But when you're looking at people who don't have the resources to do that or don't have the need, it's you go to the other end of the scale and are able to buy single use or small quantity products and services that fit your current need. We have a question about the scope of cybersecurity in fintech, which is I'm not even going to try to say Arvind's full name because I will stumble. But Arvind asks this question about what is the scope of cybersecurity in fintech?
Significantly large, considering that large parts of fintech are actually uh, belong in the regulated domain. Now, making sure that the customer data is secure and people are able to do transactions in a secure manner is one of the preeminent requirements that we as regulated entities have. So We are always on the lookout for people who can actually help us in protecting both our customers as well as ourselves from malicious attacks. And if you look at it, as digital commerce as well as fintech has evolved, fraudsters have come in and digital frauds have kept on increasing. So having the best quality cyber security experts is, I would say, a precondition for running a successful digital business today.
We have time for just a couple more questions. One of them is from Umir, who says, someone with no experience in the finance industry, where would be a good place for him to start? Wants to get into fintech.
Well, if you have, let's say, tech or analytics experience, then probably a lack of finance would still not be a hindrance. If even if you have, let's say, a good BD experience, that also works. So I would say knowing finance is good, but it's not really something which will prevent you from embarking on a fintech career. All you have to find out is, okay, what are the other core skills that you have? Get some understanding of the industry, and considering the massive growth that the industry is experiencing, getting a job is relatively easy today.
And the last question I can take is, what are your thoughts on the role and impact of smart automation and AI in fintech?
Smart automation, definitely a lot. Now, AI, I tend to have a slightly different opinion that a lot of people, especially in the fintech industry and in the industry that I'm operating in, we all talk about AI. While in reality, what we are using are basically, to a large extent, machine learning models, which technically can't be called AI. These are all models which are probably just, you can call it, let's say, non-linear models. But it's definitely not AI. In fact, AI as a term is actually quite widely used, but quite widely misused as well. True AI is very difficult to build, and its commercial implications are actually quite few and far between today. But smart automation, definitely. If you look at it, bulk of what we are doing is all process based. Making sure that all these processes can run automatically is at the core of our operations.
Great. So that takes care of the questions and the answers. And let me go to the next poll, and I'll put that up in just a second. So we go here. So allow me to start this. And this is about the different skills that people in the audience might be interested in acquiring. So we've heard about different skills that the fintech industry needs, and different ways the fintech industry will impact pretty much everything in the digital world. So what are the tools that you want to add to your personal toolkit, the digital domain? And more, most importantly, when do you want to get started doing that? Give you another 15 seconds or so. You have about 5 seconds to get your answers in and finalized. All right, and I'll share the poll results. As you can see, Yogendra, I think the most popular category is business and project management, but also data science, machine learning, and across the board in various other aspects of technology. And it's good to see that about a third of the audience is interested in getting started right away, and another 20%, at least within the next 3 months. So with that, I'm going to say thank you to Yogendra for being here. I will put into the chat here your LinkedIn address, if that's all right.
Of course.
And give me a moment to do that. Oops. right, it's in the chat window. You can find the link to Yogendra's LinkedIn. And thank you again so much for being here, Yogendra. Really appreciate it. It was a fantastic presentation and a lot of very cutting questions from the audience that showed that there's a really big interest in FinTech. I want to finish by just mentioning two things. One is our Skill Up program, which is a free program from Simplilearn that covers a number of different skills in the digital domain. And this one is a free self-learning program that allows you to earn certificates in various skills. It's basically a simplified version of our online interactive courses that include live virtual classrooms and hands-on labs. Skill Up doesn't have those elements, but it does allow you to self-study in hundreds of different digital skills. So I've put the link into the chat, and I'll make a plug for the next general webinar we're doing. And this actually applies directly to what Yogendra had mentioned about process. And our next speaker on Wednesday, May 11th, is Laura Hendricks, who is the head of RPA and process automation at First Horizon Bank in the United States. And she will talk about how she's used lean principles to direct her work, both in applying lean principles to the processes she re-engineers, but also applying lean principles to managing her team. And she'll give you some advice about how you can do the same in your work and your career. So that will be Wednesday, May 11th, same time, 9 p.m. India at 8:30 a.m. Pacific and 11:30 a.m. Eastern here in North America. And with that, I want to say one final thank you to Yogendra. Thank you to our audience for being here. And I'd like to invite everybody to follow us on our social channels at Simplilearn on Facebook and Twitter, and Simplilearn on LinkedIn. And we look forward to seeing you at future Simplilearn events, but we also look forward to seeing you in our Learner community. Again, thanks, Yogendra.
Thanks, Stuart, and thanks everybody for joining.
All right.